Rose Bailey, stay beside the
Those
tables.
communities hired Rosewood to manage everyday
The
things.
case says their dues were moved for expenses the boards never approved.
Property management always looks messy from the outside.
This was more than messy. It was over $1 million from HOAs you managed.
This is Rose Kasande Bailey, and what you are about to see is not a one-time mistake. She did this across 70 communities for over a decade, and she left falsified bank statements behind every single time.
You are making this clubhouse sound like every neighborhood trusted me with one person.
She would not get the chance to explain. Within 24 hours, federal investigators from the Eastern District of Virginia would seize the laptop she used to draft falsified bank statements, the checkbooks that gave her signing authority over more than 70 homeowner association accounts, and the internal Rosewood ledger that documented every transfer she had ever made between communities that trusted her with their dues. Over $1 million, 70 HOAs, 12 years, every roof fund, every landscaping budget, every reserve account she touched would be audited line by line. And the people who had paid into those accounts month after month for years would learn the same week that their property manager had been moving their money between strangers' communities to plug holes only she could see. Quick question. Do you know who manages the dues at your homeowner association? And have you ever asked to see the books? Sound off in the comments and let me know what you've seen. And if you're not subscribed yet, this is the kind of case we cover every week. The people who control quiet, communal money are the easiest ones to miss. Rose Kasande Bailey was born in 1964 in Kampala, the capital of Uganda. Her father was a primary school teacher. Her mother kept the books for a small textile shop on Kampala Road. The family lived in a modest brick house in the Mengo neighborhood, 2 blocks from the Kabaka's palace, and Rose grew up watching her mother balance ledgers at the kitchen table by lamplight, sliding a pencil down columns of shillings and naming each entry out loud. She would later tell colleagues that she could not remember a time when she did not understand a balance sheet. By the age of 9, she was checking her mother's arithmetic. She was the second of 4 children and the only daughter. In 1971, when she was 7 years old, Idi Amin seized power, and within 2 years the country her parents had built their lives around began to come apart. By 1979, when Amin fell, Rose was 15, and her parents had decided that none of their children would build their futures in Uganda. Her older brother left first, for London. Rose followed in 1984 on a student visa to Northern Virginia Community College, with 2 suitcases and a name pinned inside her coat with the address of an aunt who lived in Annandale. She worked nights at a Bob's Big Boy on Route 7 while she finished her associate's degree in accounting. Then she transferred to George Mason. She graduated in 1989 with a bachelor's in business administration. She married a fellow Ugandan immigrant named Patrick Bailey in 1991, and over the next 8 years they had 3 children, 2 daughters and a son, and bought a townhouse in a small association off Braddock Road in Fairfax. That was where she first encountered an HOA from the inside. She joined the board as treasurer in 1996. She held the position for 4 years. Her first job out of college was as a junior accountant at a regional property management firm in Falls Church called Cardinal Community Services. She stayed there for 11 years. Her performance reviews, later subpoenaed during the investigation, described her as detail-oriented to a fault, exceptionally organized, and uniquely talented in client communication with HOA boards. A 2003 review called her the most reliable employee Cardinal had ever onboarded for the small association portfolio. She was promoted to senior account manager in 2005 and to portfolio director in 2008. By 2011, she was managing the firm's relationships with 32 associations across Fairfax and Loudoun counties. In the summer of 2012, she gave Cardinal her notice. She told her supervisor she wanted to spend more time with her 2 younger children, who were still in middle school. She told her board contacts something different. She told them she had decided, after 16 years of watching how the industry worked from the inside, that she could do it better on her own. Smaller, friendlier, more personal. A property manager who would answer the phone on a Saturday morning when the irrigation system broke. A property manager who would sit at the kitchen table with a new board president and walk them through their fiduciary duties, 1 column at a time. the way her mother had taught her. She formed Rosewood Management and Consulting Services, LLC, on August 14, 2012, registering the company with the Virginia State Corporation Commission and listing her home address in Warrenton as the principal office. The website went live 3 weeks later. The logo was a stylized rosewood leaf in 2 shades of green. The tagline read, "Your community, our care." Within 90 days, she had signed her first 4 HOAs. 3 of them had followed her over from Cardinal. By the end of 2013, she had 11. By 2015, 26. By 2018, 41. By March of 2023, the month the wheels began to come off, Rosewood Management and Consulting Services was the contracted property manager for 72 homeowner associations across Northern Virginia, from a 46-unit townhouse community in Falls Church to an 812-unit master plan development outside Leesburg. She had 2 part-time bookkeepers, a maintenance coordinator, and an answering service. She did the accounting herself. To understand what Rose Bailey did, you have to understand what a homeowner association actually is, because most people who pay HOA dues every month have only the foggiest idea of where that money goes or who controls it. A homeowner association is a private nonprofit corporation. When you buy a townhouse in a planned community, or a condo in a managed building, or a single-family home in a development with shared amenities, you become a member of that corporation, and you agree by deed to pay dues to it. Those dues fund the things no individual homeowner could afford alone: the roof on the clubhouse, the asphalt on the private streets, the lifeguards at the pool, the lawn service, the snow removal, the roof replacement that has to be planned 20 years in advance and funded a little bit every month from a reserve account that no one is supposed to touch. The board of directors of an HOA is made up of volunteer homeowners. They are software engineers and retired school teachers and small business owners and stay-at-home parents. They are not accountants. They are not lawyers. They are people who agreed, often after a meeting where no one else wanted the job, to serve a 2 or 3 year term overseeing the financial life of a community they happen to live in. They meet once a month in a clubhouse or a community center. They approve invoices. They sign off on contracts. They worry about the swim team. In Virginia, like in most states, an HOA board is permitted to delegate the day-to-day operation of the community to a professional property management company. The board sets the policy. The management company does the work. The management company collects dues from members, holds those dues in the association's bank accounts, pays the association's bills, files the association's taxes, and provides the board with monthly financial reports. In almost every case, the management company is given signing authority on the association's checking and reserve accounts, because if a board member had to personally sign every check, no one would ever volunteer for the board. That is the trust framework. The board owns the money. The management company moves the money on the board's behalf. The bank statements come to the management company first, and the management company prepares a clean monthly report for the board. In a healthy relationship, the board independently verifies the underlying statements at least once a year, usually through a paid audit. In an unhealthy one, the board takes the management company's word for it. Rose Bailey had spent 16 years inside that system before she founded Rosewood. She knew exactly where the weak seams were. She knew that small to mid-size HOAs almost never sprang for a real audit, because a real audit cost $5,000, and the board would rather spend that money on mulch. She knew that boards changed every 2 or 3 years, and that new treasurers rarely looked back further than the previous quarter. She knew that the bank statements arrived in PDF form, and that a PDF could be edited by anyone with the right software in an afternoon. She knew that as long as the monthly report balanced, the board would sign it. She knew that as long as the assessments hit the account on the 1st of the month, no one would ask whether the money was still there on the 15th. The first transfer happened in March of 2013, 6 months after Rosewood opened its doors. It was small, $4,100 from a community in Lorton called Mason's Run, sent to a Rosewood operating account labeled Management Fees, Q1 Reconciliation. There were no Q1 management fees outstanding. The board at Mason's Run had paid Rosewood's quarterly invoice 11 days earlier. Bailey simply moved the money from the HOA's checking account into her own and dressed it up in language that no one would think twice about. For the first 3 years, the thefts stayed small and stayed sporadic. 2,000 here, 6,000 there. Always labeled in a way that suggested a legitimate fee, an adjustment, a reconciliation. Always taken from associations that did not maintain reserve studies because they were small enough that no one demanded one. Federal prosecutors would later count 117 separate transfers between March 2013 and December 2015, totaling just under $94,000. In that same 3-year window, Bailey reported a personal household income on her joint tax return of roughly $110,000 a year. The extra $30,000 a year, untaxed and untraceable, went into a separate checking account at a credit union in Manassas that her husband did not know existed. Then in 2016, the pattern shifted. In April of that year, the Baileys closed on a 4-bedroom colonial in Warrenton with a wraparound porch and 3 acres of pasture. The mortgage was $460,000. The down payment was $92,000. $41,000 of that down payment came from the Manassas Credit Union account. The rest came from a wire that Rosewood management received in March from a community in Reston called Wexford Glen, a wire that the Wexford Glen board never authorized and never saw on a reconciled statement because the statement they received that month had been retyped, line by line, in a Microsoft Word document made to look like a Bank of America export. After Warrenton, the scheme accelerated. The kids were getting closer to college age. The oldest daughter started at the University of Virginia in the fall of 2017. Tuition, room, and board ran a little over $30,000 a year, and Bailey paid every semester's bill on time, in full, by personal check. The second daughter started at Virginia Tech 2 years later. The son started at George Mason in 2021. By the time all 3 children were in school simultaneously, the household was carrying close to $90,000 a year in tuition costs alone, on top of 2 mortgages, 2 car payments, and the operating expenses of a small business. The thefts grew to match. Investigators would later document that between 2017 and 2022, Bailey moved an average of $140,000 a year out of HOA accounts and into accounts under her own control. She rotated which association she pulled from, so that no single community ever showed a catastrophic loss in a single quarter. She moved money sideways before she moved it out, parking it briefly in the operating accounts of other HOAs to disguise the trail. She generated false invoices from a fictitious landscaping vendor she called Greenline Property Services, issued from a P.O. box in Manassas, payable to a bank account she controlled. Greenline Property Services did no landscaping. Greenline Property Services owned no equipment. Greenline Property Services was a checking account with a website that had been online for 48 hours in 2014 and then quietly removed. She knew it could not last forever. She told herself it would last long enough. In January of 2023, a board member at a 400-unit townhouse community in Falls Church called Briarwood Commons opened her monthly financial packet from Rosewood and noticed that the reserve account balance had gone up by exactly $22,000 in a single month, with no contribution listed. She was a retired auditor for the General Services Administration. Her name was Patricia Lynn. She had been on the Briarwood board for 4 months. She emailed Rose Bailey to ask about the entry. Bailey wrote back within the hour and explained that it was an investment interest adjustment from the prior quarter that had posted late. Patricia Lynn asked to see the underlying bank statement. Bailey sent her a PDF. The PDF balanced. The PDF was also a forgery. Patricia Lynn asked for the statement directly from the bank. Bailey said she would request a duplicate. A week passed, then 2, then 3. Bailey stopped responding to emails about the statement specifically while continuing to answer every other question about routine community business. Patricia Lynn called the bank herself in early February. She gave them the Briarwood Commons EIN, identified herself as a board member, and asked them to mail her a duplicate copy of the December statement. The statement arrived 8 days later, The reserve account balance on the bank's actual statement was $41,000 lower than what Bailey had reported to the board. The investment interest entry did not exist. Patricia Lynn took the two statements, the one Bailey had sent and the one the bank had sent, to the board's attorney. The attorney compared them line by line. Then he called the FBI's Washington field office. While that conversation was happening, a separate HOA on the other side of Northern Virginia was already in the process of leaving Rosewood. A community in Leesburg called Cottonwood Crossing had voted in November of 2022 to switch to a different property management company effective March 1, 2023. The standard process for a transition is straightforward. The outgoing manager hands over all books, records, and bank account balances to the incoming manager on the effective date. The incoming manager verifies the balances against the most recent reconciled statements. The board sign off. The keys change hands. On February 27th, 2 days before the handover, the Cottonwood Crossing Reserve account was supposed to contain $617,000. The actual balance was $11,000. Bailey had been stealing from that account, in small slices, for 4.5 years. There were no funds to hand over. The new management company would discover the shortfall within 48 hours of taking over the books, and the lawsuit that followed would unravel everything. So on February 28th, Rose Bailey did the only thing that could keep the handover from blowing up immediately. She moved $603,000 out of the reserve and operating accounts of 9 other HOAs she still managed, consolidated it into the Cottonwood Crossing account in a single afternoon, and prepared a final reconciled statement that showed the account in good standing. The transfer was completed at 4:47 p.m. The handover was scheduled for 9 a.m. the next morning. We're heading into the federal investigation now. If you want to know exactly how a case this quiet gets pieced together, once one person finally compares the statements, stick around. This is where it gets unbelievable. Subscribe if you haven't yet. We cover the cases that small communities never hear about and never get justice for. The Cottonwood Crossing handover proceeded on the morning of March 1st without incident. The new management company received what appeared to be a properly funded reserve account. Bailey closed her laptop in her Warrenton home office and exhaled. She believed she had bought herself another quarter. She had bought herself 11 days. On March the 12th, the FBI's Washington field office assigned the Briarwood Commons complaint to Special Agent Rebecca Halstead of the Financial Crime Squad. Halstead had spent 14 years investigating embezzlement schemes and had a particular interest in HOA-related fraud, which she would later describe in an internal memo as the most underreported category of white-collar crime in the federal system. She began with a single subpoena to Bank of America for the actual reconciled statements of every account associated with Briarwood Commons over a 6-year window. The statements arrived 9 days later. Halstead compared them line by line against the monthly reports Bailey had provided to the Briarwood board over the same 6-year window. She found 341 discrepancies. The smallest was a $46 entry. The largest was a single $82,000 withdrawal, labeled in the board report as annual reserve study contractor, paid in full, with no contractor and no reserve study to show for it. That was when Halstead understood she was not looking at a single embezzlement. She was looking at a portfolio. She subpoenaed bank records for every account Rosewood management had touched. The list ran to 72 HOAs and more than 200 individual bank accounts. The subpoenas went out in batches over 3 weeks. The statements came back over the next 2 months. By June, Halstead and a forensic accountant from the U.S. Attorney's Office had constructed a spreadsheet that mapped every transfer Bailey had made between any 2 accounts under her signing authority over an 11-year period. The spreadsheet was 46,000 lines long. The pattern was unmistakable. Money flowed in circles. An HOA in Lorton would lose $40,000 in May. An HOA in Reston would lose $28,000 in June. The Reston money would briefly appear in the Lorton account in July to balance a board report. Then both communities would lose money in August to cover a transfer to Bailey's personal account at the credit union in Manassas. The Cottonwood Crossing transfer, $603,000 moved in a single afternoon from 9 separate communities, was the largest single circular transaction in the dataset, but it was not the only one. There were 41 similar transactions of more than $50,000 each, going back to 2017. The smoking gun, when it came, was not a spreadsheet. It was a file folder Bailey had kept in the locked bottom drawer of her home office desk. When federal agents executed the search warrant on her Warrenton home on August 7, 2023, they recovered a manila folder labeled, in Bailey's own handwriting, Statement Templates. Inside were 48 printed pages of blank PDF templates of Bank of America statement formats from 2014, 2016, 2019, and 2021, each one annotated in pencil with notes on which fonts matched which year, which column widths to use, which footer disclosures Bank of America had quietly updated. The folder was the lab manual for the forgeries. She had built it herself, one statement at a time, over 11 years. They also recovered her laptop, on which they found a folder titled Rosewood Admin, containing 293 Microsoft Word documents, each one a falsified monthly bank statement, organized by community and date. The metadata on the earliest document showed a creation date of June 14, 2013. The metadata on the most recent showed February 27, 2023, the day before the Cottonwood Crossing handover. The arrest happened on the morning of August 7, 2023, at 7:12 a.m., at the front door of Bailey's home in Warrenton. She was already up. She had been making coffee in the kitchen when the agents knocked. Her husband was upstairs. Her youngest son, home from George Mason for the summer, was asleep in the basement. 2 agents stood at the door, Special Agent Rebecca Halstead and a second agent from the Financial Crime Squad. They introduced themselves. They told her they had a federal search warrant and an arrest warrant. They asked her to step out onto the porch. She did. She was wearing slippers and a blue cardigan. Her hands were shaking slightly. She put her coffee mug down on the porch railing. Halstead: Mrs. Bailey, do you understand why we're here this morning? There was a long pause. Bailey: I think I do. Halstead: Can you tell me in your own words? Bailey: The accounts, the HOA accounts. Halstead nodded. She told Bailey she would need to come with them, that agents were going through the house at that moment, that they would take her computer, her phone, and the records in her office. She asked Bailey if she had anything to tell her before they went. Bailey looked past Halstead, toward the pasture across the road from her house, where 2 horses belonging to a neighbor were grazing in the early morning light. Her eyes filled. She did not cry. Bailey: I knew you would come eventually. I have known for a long time. She was asked nothing else of substance that morning. Within 90 seconds, she had asked for a lawyer, and the agents respected that request and did not question her further. She was transported to the FBI's Manassas Resident Agency for processing, and then to the federal courthouse in Alexandria for her initial appearance. A federal grand jury in the Eastern District of Virginia returned an indictment against Rose Kasande Bailey on November 14, 2023, charging her with 1 count of wire fraud under 18 U.S.C. Paragraph 1343. The single count, prosecutors explained, encompassed a pattern of conduct spanning more than a decade and dozens of victims, and was structured to allow the government to consolidate restitution claims from 70 associations into a single sentencing proceeding. Her attorney was a veteran, white-collar defense lawyer from a firm in Tyson's Corner named David Schreiber. Schreiber's strategy from the start was not to fight the facts. The facts were unfightable. The forensic spreadsheet alone ran to 46,000 lines. The statement templates folder, in Bailey's own handwriting, made any denial preposterous. Schreiber's strategy was mitigation. His client was a 60-year-old first-time offender. She had cooperated fully after her initial invocation of counsel. She had agreed to forfeit her interest in the Warrenton home, 2 retirement accounts, and a 2019 GMC Acadia. She would plead guilty without trial. She would help the receiver appointed by the court identify which transfers had gone to which communities, so that the restitution allocation could be as accurate as possible. On August 30th, 2024, before U.S. District Judge Leonie M. Brinkema, Bailey pleaded guilty to a single count of wire fraud. The plea hearing lasted 41 minutes. She answered each of the judge's questions in a low, steady voice. When Judge Brinkema asked her whether she understood that the maximum sentence for the offense was 20 years in federal prison, Bailey answered, "Yes, Your Honor, I understand." Sentencing was scheduled for November 26, 2024. The pre-sentence report calculated total losses of $1,147,000 across the 70 associations. Restitution was set at that amount. 12 associations submitted written victim impact statements. 3 board members spoke at the sentencing hearing in person. The first was Patricia Lynn, the retired GSA auditor from Briarwood Commons, whose phone call had started the investigation. "We trusted her," Lynn said. "We trusted her completely. She came to every board meeting. She knew our children's names. She knew when our roof was due for replacement. She told us we were in good shape financially. We were not in good shape financially. We are now $81,000 short of the reserve target we believed we had hit. The owners in our community are going to be assessed an additional $400 each over the next 2 years to make up the difference, and many of them cannot afford it." The second was a man named Howard Chen, the 71-year-old treasurer of a 60-unit condominium community in Lorton called Mason's Run, the first HOA Bailey had ever stolen from, all the way back in 2013. "She stole from us for 10 years, Chen said, his voice thin. 10 years. We did not catch her. We did not even suspect her. We thought she was a friend. The hardest part is not the money. It is that we have to look at every face in our community now and explain how we did not see this." Judge Brinkema delivered her sentencing remarks for nearly 11 minutes. The transcript would later be reproduced in legal newsletters across the property management industry. "Ms. Bailey," the judge said, "you held a position of trust that is unusual in white-collar cases because of how diffuse it was. You did not steal from a single employer, a single bank, a single set of investors. You stole from 70 communities of ordinary homeowners, none of whom had any independent ability to verify the accuracy of the statements you provided them. You stole from retired teachers and small business owners and parents saving for college. You stole the money they had set aside for the roof over the clubhouse and the asphalt on the streets where their children ride bicycles. And you did it for 11 years, in plain sight, while sitting at their kitchen tables and asking after their grandchildren." She paused. "What troubles me most about this case is not the amount. It is the architecture. You did not steal in a single panicked moment of need. You built a system. You built statement templates. You built a fictitious vendor. You moved money in circles across communities specifically so that no single community would ever see a number large enough to make them ask a question. You designed a fraud that could only be detected if someone outside your system compared 2 pieces of paper, and you spent 11 years making sure no one ever did. That is not desperation. That is craftsmanship, and it is exactly the kind of craftsmanship the federal sentencing guidelines exist to deter." Judge Brinkema sentenced Rose Kasande Bailey to 24 months in federal prison, 3 years of supervised release, and restitution in the amount of $1,147,000 to be allocated among the 70 victim associations according to a schedule prepared by the court-appointed receiver. She was ordered to self-surrender to a federal facility on January 13, 2025. She was designated to FPC Alderson in West Virginia, the same minimum security federal prison camp where Martha Stewart had once served her sentence 2 decades earlier. She is expected to be released in late 2026. Upon release, she will be barred for life from any role involving fiduciary control of association funds in the Commonwealth of Virginia. The receiver has so far recovered approximately $340,000 of the stolen money. The remaining $800,000 is gone. Spread across 70 communities, the average per association shortfall comes to roughly $11,000. Small enough, in isolation, that no single board ever looked twice. Large enough, in aggregate, to end the freedom of the woman they had all trusted. that story was quiet. But the case on the right-hand side is louder than anything you have heard this week. Click it now.